Ladies and gentlemen, we are back, and boy do I have an exciting episode for you today, because what I have been doing, I've taken a step back, I've been doing tons and tons of research on what I think is going to happen in 2024, and what I see coming will be the biggest financial event of your lifetime. So everyone, what exactly have I found? What is happening in the markets right now, and how can we prepare for what's coming in 2024 to save our money and also to save our investment portfolios, but also to make huge returns and profit from the situation? Well, everyone, that's exactly what I'm going to cover in today's video. So let's not waste any time. Let's get straight into the news, the facts, and the data. Well, first things first, everyone, is this. What is happening hasn't happened since 1933 and also the Great Depression. So what was that? Well, let's dig a bit deeper. But before we get into that, I want to talk about some other macroeconomic data and some news that is happening right now that paints a picture for what will happen in 2024. Now, this is very interesting. Look at this. China's consumer prices fall the fastest in 3 years, and factory gate deflation deepens. Now, what I find very interesting and very funny, if you use some common sense, China has been putting out data saying that their economy is booming, GDP is booming, but other data we're getting is contradicting that. If the economy was booming, they wouldn't have deflationary prices, okay? So what I think is going to happen is we could see China, the second biggest economy in the world, have a huge financial crisis. It's already happening now. This is not me fear-mongering or saying something that's going to happen that's not going to happen. It's already happening right now. Their property market is imploding. We have all the proof there with Evergrande, Country Garden going down, many other huge developers going down. Their shadow banking industry is in shambles. That's collapsing. And it's only a matter of time before China collapses, and that has a ripple effect throughout the whole global economy. Now, we did also get some other very, very interesting data. The November jobs report, or should I say, the BLS report. Some people just say it's BS. So they said there was 199,000 jobs created, which isn't that much, and the unemployment rate is still at 3.7%. So what this means is the Federal Reserve, apparently, if you use common sense, but we'll get into that a bit later, shouldn't really be cutting interest rates next year, but that may be about to change. They're speaking in a lot of riddles here. They're saying one thing and doing the other. But this shows us that the economy is not as strong as we expect. And also, I think there's going to be some real uptick in the unemployment rate in 2024. But we did get some Fed speak out from one of the Fed zombies. Fed's Barkin says rate hike still on the table if inflation doesn't continue to ease. Now, we all know that the CPI or the CPI report doesn't show what's really going on with inflation. You know, I just went to the supermarket, I guess in the US you call it the grocery store, and a 24 pack of water bottles, the cheapest one was $6. Now it's $9.50. It's absolutely crazy. It's gone up 50%, just like that. Okay, so Richmond Fed President Thomas Barkin said he's not ready to commit to a particular policy path with so much uncertainty in the air. And that's exactly right. This market, or should I say the stock market, but I'll talk more about gold and Bitcoin later in the video, is all rallying on the hopes that there will be rate cuts early next year. So Barkin called the possibility of easing policy and cutting rates a forecasting question that he's not ready to answer. Atlanta Fed President Rachel Bostic also offered commentary Wednesday, saying in an essay that he sees economic growth slowing substantially. And I think there will be a recession. Whether they actually admit it's a recession or not is another question, and believes inflation will come down further as well. Now, that may be the case, but only if this one financial event happens, which I'll get into in a moment. But we need to talk about some more data, because there's also a huge difference right now between GDP and GDI. GDP is gross domestic product and GDI is gross domestic income. GDP, they're saying, is 5% when GDI income is only 1.5%. So this is not making sense, just like the Chinese economic data that's coming out. Now, that's some mixed signals with the data, but we need to talk about some bigger things that are going to be happening. More with the US debt. Now, look at this. This is crazy. It seems like now, every time I check this week after week, it's gone up another trillion. We're almost already at 34 trillion when it seemed like it just hit 33 trillion a month ago. So this is playing a huge factor in the economy, and what I think is going to play an even bigger factor with what the Federal Reserve will do. Really, they're talking tough that they're going to keep interest rates high for longer, but with the US debt nearly $34 trillion, and we're about to go into a very contentious world where there's going to be a lot more global conflicts break out. Military spending is going to go up through the roof. I think what the market is thinking, that the Federal Reserve may have to monetize the debt again if this event, which I'm about to say in a minute, will happen. Now, also this, JP Morgan says S&P will fall next year amid challenging macro backdrop. That's exactly right. We see weakening GDP, weaker consumer spending. We're seeing debt absolutely skyrocket, and again, the lag effect. We still haven't felt the full effects of these interest rate hikes because it can take up to 12 months for us to feel the full effect after interest rates hit their peak. Now, not only this, but if you look at this is the S&P price to earnings ratio. Now, this chart goes back over 100 years, and where we are right now is 25. And what is the mean and the median? Well, the median is around 15 and the mean is around 16. So the stock market is still severely overvalued, and we have a huge risk of falling into a recession next year. That means companies' earnings are going to fall. And if their earnings fall, this price to earnings ratio will get out of whack. And if interest rates still stay up, people are just going to put money in bonds or put money in a cash deposit account and outperform the stock market. Okay, so that is a big risk. Next, another chart here. I'll go ahead and make it a bit bigger so it's a bit easier for you guys to see. Move myself a bit. Next, interest payments have now surpassed 500 billion and aggressively rising. This is why we haven't seen a huge economic crash yet, is because people have been keeping up with the rising costs on credit cards. But unfortunately, they can't keep on doing that forever. Eventually, their credit cards will get maxed out, and that is what's happening now. And then the bill is going to come due. Because look at this next chart here. New mortgage monthly payments are absolutely skyrocketing. Look at this. In 2008, a monthly mortgage was around roughly $1,400 a month. But now there are people paying all the way up to $3,000 a month. And this is simply unsustainable. A lot of investors, they're negative cash flow right now. A lot of Wall Street investors would have stopped buying. They're probably putting their money in bonds, waiting for a crash. And that's something I definitely would be doing right now. And the way interest rates are right now, with home prices still being close to all-time highs, there has been some areas that have tanked about 20 or 30%, but the national average is still at all-time highs. It simply does not make sense, and a huge correction is needed in the housing market as well. And again, look at this next chart here. The probability of a recession in 2024 is severely elevated. We can see right here that it is above 60, which is way higher than in 2008. So I think it is just simply unavoidable. We will have a recession, and it may even rival the Great Depression, because I'm going to show you this next chart, which will absolutely blow your brains out. Look at this. This is the M2 money supply. Now, I've got versus inflation as well. I'll go ahead and adjust this so you can see it a bit easier. We can see that we have not seen where we are right now. The black is the M2 money supply. The red is inflation. Look at this contraction. In the increase, it went up 26% in 2021. That's why the stock market went nuts, because they completely devalued the currency. Okay, and that's why we had record inflation, because this was record money printing. Now it has absolutely collapsed, and it's fallen on a rate of around nearly 5%. And again, we haven't seen these levels since the Great Depression in the 1920s. So if this M2 money supply keeps on contracting, we will see a massive recession in 2024, and we'll see a huge stock market crash. Now, I know what you're thinking, well, how can we protect ourselves against this, okay? Because not all stocks will go down. It will just be the major indexes. And in the S&P 500, it's just been the big tech stocks, the Magnificent Seven, they call it, that have been lifting up the stock market. There still is lots of opportunities, and I'll tell you that in a moment. Because look at this. Gold has just hit an all-time high. It hit around $2,100 an ounce, and this is what I was telling people would happen. And this is exactly what I told you guys would happen this year. I said gold was going to hit an all-time high, and I think it can go much higher from here. Now, why is this such a good play right now? Well, what happens to gold in a recession? There's a lot of people that go to a safe haven. Gold is a safe haven because what else normally happens in a recession? Well, they turn the money printers on again. And what does gold do? It is a hedge against your purchasing power being devalued, and it's a hedge against inflation. So what gold will do for you is it would help you with two scenarios, because I think there's two scenarios that could play out for. Either we had this huge recession and the Federal Reserve cuts interest rates, or what they could do is they could not even have a technical recession, but for whatever reason, they need to fund the government's debt that is getting absolutely out of control. And so what they do is they start monetizing the debt and printing money like crazy. And we have huge inflation. We have another spike of inflation, which I've been saying is a big, big risk. And we have a market melt up. Now, what I have for this scenario, if we have a massive market melt up, gold will go up. But what I think will outperform gold is Bitcoin. This is what I've been talking about all along. We'll go ahead to the chart here of where gold Bitcoin is right now. It's around 43,000. Now, I was telling you guys around 20,000, 25,000 that you may want to have a look at having some Bitcoin in your portfolio. Again, not financial advice. This is what I'm doing. I'm not saying put 100% of your portfolio in Bitcoin. It is a very risky asset. It is a risk-on asset, but I do think it is digital gold. I do think it is sound money, and it will appreciate over time. It's just it is a lot more volatile than gold. But for example, you could have 40% gold. You can have a bit of silver, 20% silver. You can have a little other things mixed in there, and maybe just 10% in with Bitcoin. But what this protects you against is if we do have an economic crash, people will run to gold as a safe haven, or if we have the Federal Reserve put the money printers on again and they start printing like crazy and we have a market melt up. Now, also what's going to happen with gold hitting an all-time high is we are going to have what's called a commodity boom. Because like what happens with Bitcoin, when Bitcoin hits an all-time high, what happens next? The altcoins then start to run, okay? The same thing with commodities. When gold hits an all-time high, a lot of other commodities start to hit an all-time high as well. And like I said, what will happen during the stock market crash is not every single stock will crash. There will be huge opportunities with miners. That's something I've been diversifying in lately, where you can get absolutely massive returns, again, much higher than you can get with buying physical gold. It is a lot more risky, but there is some massive opportunity, and that's what I want to talk about today. Because ladies and gentlemen, something came across my desk that I rarely see in today's environment. What is it? Well, it's a resource that's powering our future, and that is lithium. And a company that's making big moves in this sector is Eureka Lithium. That's ticker symbol UREKF. So let's dive in and understand exactly why this company is turning heads around the world. Well, first things first, lithium is absolutely crucial, not just in the West, but globally. In China, EVs are the talk of the town, with companies like BYD outperforming Tesla in sales. And here's a fun fact, there's no substitute for lithium in these electric vehicles. That's right, it's irreplaceable. But here's the twist, we're facing a global lithium shortage. Countries like Chile are nationalizing their lithium, and with political shifts in Argentina, the world's eyeing reliable partners for this precious resource. And who's emerging as a trusted ally? Well, that's Canada. Now enter Eureka Lithium. Strategically positioned in Quebec's vast Nunavik region, they're the first to break ground in an area poised to be the next James Bay, but with less competition. And the driving force behind Eureka? None other than Sean Ray, a visionary who revolutionized the gold industry, and now he's all in on lithium. He's gone from living into a shack to absolute millions. Sean walked the Yukon for a decade, discovering gold when it was at an all-time high. Now he's bringing his Midas touch to lithium, making Eureka the largest landholder in Nunavik. Billionaires like Bill Gates and Jeff Bezos are jumping in on this lithium rush as well. Investing in regions like Nunavik, this signals massive potential, and with ExxonMobil joining the lithium game, the race is on. And guess what? Eureka hasn't drilled yet, so you have an early advantage. But that's about to change. They're gearing up for drilling in 2024, offering a unique opportunity to get in before things really take off. This is the first mover advantage, vision, and pioneering spirit all rolled into one. Because get this, with a market cap of just 18 million USD, Eureka's position not just as Canada's lithium beacon, but as a reliable source for the Western world's growing lithium needs. They're not just sitting on potential, they're leading the charge in the global white gold rush. Now, if you compare their company with other companies that have announced good lithium mining results, we have seen some of these stocks go up 2, 3, even 10x. And with the people behind Eureka Lithium, I absolutely believe that they can deliver. So there you have it, everyone. Eureka Lithium, that stock's ticker symbol UREKF, is a name you want to remember in the lithium sector, and start doing your due diligence today. Now, back to the content. So again, everyone, I think there is going to be huge risk in 2024. You're definitely going to want to position yourself for whatever scenario could happen. Again, you have some gold in your portfolio, you have some Bitcoin in your portfolio, some silver, and also some mining stocks as well, that if gold continues to go up like this, we're going to see these mining stocks absolutely boom. But everyone, what do you think? What do you think will happen in 2024? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.